What's good with it, y'all? So look, today I'm going to do a quick trade recap of New York lunch session that I just took. I did wake up late again, but I managed to get this quick trade in. First of all, if y'all watch my previous videos, y'all should know what a classic buy slash sell day is. Looking into this chart, as you can see, Asia high got swept, but the lows never did. This is considered a classic short day. Now, around New York on pre-market, Asia lows they get swept, but my daily bias is still bearish, so all I'm looking for is shorts. Now, when I woke up around this time, there was a sell side liquidity sweep on the high time frames, and FOMC is dropping in a couple hours, so I had to be really careful. I only targeted low hanging fruits as my take profits. But on the 15 minute, as you can see, this high right here, this high got swept, this buy side liquidity. Soon as this happened, I scaled down into the 1 minute. Um, in the 1 minute, as you can see, this is the liquidity sweep. Price is fractal, so whatever happens on the high time frame happens on the lower time frame as well. But on the 1 minute, all I'm looking for is a breakout structure to the downside and a retracement. Right here, this is considered a breakout structure, TJR's breakout structure, because this candle body right here, this place below this low. Now to create a low, you need a down candle and an up candle, off of an up candle, and the lowest wick between these two will be the low. So this is my low, and this candle displays below that low, so this is a valid breakout structure. And also to create a high, you need an up candle and a down candle, and the wick between these two, the highest wick is the high. So this would be my high. But since I'm only looking for shorts, I'm not looking for a breakout structure to the upside. So when this breakout structure happened, all I was looking for was a retracement. Now what price did was price left behind this SIBI, or a bearish fair value gap, for me, and this was perfect. SIBI. Now to create a SIBI, or a bearish fair value gap, you need three candles. Candle 1, candle 2, candle 3. Now all of them play an important role. The middle candle, this bearish candle, is what determines what kind of a fair value gap it is. Since this is a bearish candle, it's a bearish fair value gap. If this was a bullish candle, it would have been a bullish fair value gap. Now the first and the third candle is what determines how big of the fair value gap it is based on the wicks of them first and third candle. Now this wick and this wick is what will determine that fair value gap. What would invalidate this fair value gap is if this wick was all the way here and this wick was here. Now since they're both overlapping, they did not create a space for a fair value gap to be formed. Now as you can see, SIBI is formed. When this happened, all I did was look for a not breakout structure, a retracement, which happened, I think it was the next candle, right here. Soon as this happened, I took a short and I placed my stop loss up here. Place your stop loss anywhere price will invalidate it. I put my right here because this is a protected high. And if you want to learn about protected highs and lows, just let me know. And my take profit, I target it right here. This low hanging fruit. This the end of this bullish for value gap. Now take profits, I could get into more details about it, but in this video I'm not. For take profits, all you want to do is target anywhere price is attracted towards. So like liquidities, fair value gaps, anything price wants to balance out or take out. So if we let this play out, it was quick. As you can see, it perfectly hit right there. But that was my trade recap for the day. Other than that, I appreciate you guys for watching and have a great rest of your day. Thank you.